For that, gentlemen, we'll come back to you and connect with you. Abneesh Roy, Executive Director at Nuvama Institutional Equities, is now joining in on the show. Thank you very much for joining in. Abneesh, you've been talking to so many corporates now to understand the inflationary impact, the rise in crude prices, and their ability to pass it on, and what the margin picture will look like just in the immediate term. So for the companies under your coverage, can you tell us some companies where we're going to see the maximum impact? What has been the feedback?
Sure, thanks. Good morning. Yes, current scenario, we'll have to monitor closely how long the situation remains. The good part is industry has seen crude at $120, $140 earlier also. And the GST rate cuts which were there in October, November, those will help because that prices customer has seen. So there is room to increase prices. In terms of your specific question, we see maximum inflation happening in paints, edible oil, detergent, and fried snacks. These are four things where we see maximum impact. Overall, FMCG sector, our sense is, will need around 2 to 3% bare minimum hike in Q1 to overcome the issue, because for most FMCG, packaging cost is around 15 to 20% of the raw material. Apart from that, segments like paints, detergent, and palm oil users, we have seen very high correlation between palm oil and crude oil for the last 7-8 years, because the mixing of palm oil in diesel starts in Malaysia, Indonesia. So these 4-5 segments should see maximum, but overall FMCG also 2-3%. Already edible oil, we have seen 4 to 5% hike. We have seen in paint, Berger, Kansai, Axo, etc. have taken the hike. We expect Asian Paints also to see the hike in the next 1 or 2 weeks. So overall, we are seeing inflation coming back. So there will be margin pressure. My sense is Q4, we will not see much impact. Q1, my sense is, based on how long the scenario is, how much the crude remains high, there will be a margin pressure for most of the FMCG company. But there are pockets where there is good news. For example, wheat crop is seeing very good this time the output because of good monsoon. So we will be positive on Nestle, Britannia. We will also be positive on Marico because Copra has cooled off. So it's not that it's everywhere inflation, but Marico, Nestle, Tata Consumer, Pidilite, and Britannia also, we will be positive on these names in the current scenario.
Yeah. We had a couple of experts from the chemical space, and day before yesterday, I think it was Abneesh. Hi, morning, Prashant there. They said ethylene-based plastics, right, important for food packaging. That basically sees you're seeing prices go up very, very sharply, is the feedback we got. Do you think that's another added element?
Yes, absolutely. Good morning. Yes, we see that that's a part of the 15-20%. So if you see for any FMCG category and company, broadly packaging cost is 15-20% of the total raw material. And mostly it is linked to either directly, indirectly to crude oil, which is say PET bottle, etc. Or it could be glass also. Glass, again, we see that medium long term, there is a high correlation with crude oil because there is very high usage of edible oil in the manufacturing part. But then there are other things which may not be that much impacted, like paper, cardboard, etc. But broad rule of thumb is 15-20% of raw material across FMCG will see a inflation which is almost linked to the crude oil. So if crude oil has gone up 60% currently, and we'll see that these are quite volatile today, 2-3% down in fact. So that's the linkage to the PET bottle packaging. That is why I think entire FMCG 2 to 3% price hike in Q1 will be needed if this continues for the next 1 month, 2 months, that kind of scenario. If it gets addressed in the next few days, I think then it's a short-term blip rather than big hike in that scenario.
We're all hoping it is addressed in the next few days. But, the other thing is fertilizers and consequently what will happen to what happens to food prices. I think you referred to that briefly. So I think the Middle East is the largest exporter of nitrogen-based fertilizers. And India is one of the top fertilizer importers from the Middle East in that sense. Now, how does that mechanism work? Will the government, like for example, for oil, is that sort of controlled and, the hit will not be felt at a farmer level? If you can just sort of talk about that and what are the linkages then into the FMCG industry in any big ones?
Yeah, sure. Good question. So first is, yes, you are absolutely right. These are very government controlled. So in fact, that's why we are positive on wheat-based RM users like Nestle, Britannia, because whatever happens to wheat globally, that doesn't impact the users in India. Same thing I think happens for fertilizer costing, because those will be government controlled. And we do see that, yes, if those things see sharp inflation, rural demand, which is faster than urban demand for most FMCG categories, that could see a question mark. Last year, of course, we had a very good monsoon. So my sense is next 1 or 2 quarters, I don't see that impact, because these things will happen with a lag. And there are multiple other things which we need to see. This time, El Nino, I think, is a bigger risk, because if El Nino is very strong, then we need to see what is the rainfall. I think that's a very important thing, because fertilizer cost will be controlled. But yes, if the rural slowdown happens, clearly for HUL, Dabur, that's on the higher side. For Nestle, which we are positive, Nestle urban is around 78% of demand. So it impacts more companies like HUL, Dabur in that scenario. But next 2 quarters, rural will still grow faster than urban for most categories in FMCG.
Okay, all right. Very quickly, ITC, you believe the worst is in the price post the recent correction? And what about Colgate? You've probably got one of the highest target prices in that one, but the stock has been an underperformer. So quick view on both these two.
So yes, ITC, our sense is worst is behind. It's a defensive stock. Most of the price hikes have been taken. Plus, definitely in terms of FMCG, they will see the GST benefit because biscuit and snacks, etc. But yes, they will need the price hike because of the palm oil there. Paper business also, the merger benefit will happen in FY27. So ITC, yes, it's a good dividend yield. Next 2 years, my sense is government regulation in terms of tax increase, very low probability because the quantum we have taken. So worst seems behind. It's a gradual earnings recovery story, not a 1 quarter story. But yes, it's a good defensive bet. Coming to Colgate, we are picking up a recovery, and definitely in Q4 also the growth will be faster than Q3. There is not much of usage of the gas, etc. So it's more of a overall packaging cost where I think the impact will be there for all FMCG, including Colgate. But that's 15-20%. So Colgate is a good stock to play FY27 because we are seeing recovery. The price hikes are happening. And we are also seeing sensitive, total, the premium and grow faster. So we are positive on Colgate from FY27 recovery perspective. But it's not in the top three names. Our top three names will be essentially Britannia, Marico, Nestle kind of names. Colgate will be lower in terms of the pecking order.
Got it. Okay, all right. Thanks a lot for that, Abneesh. Wishing you a good day, and we chat up soon. Let's go across to our technical experts.